Based on the historical data and forecast, Bitcoin shows a declining trend. The RSI consistently stays below 80, indicating a lack of strong overbought conditions, and dips below 37 on December 15, 2025, signaling a potential oversold condition. The forecast for the next week predicts a continued downward trajectory, reaching as low as $82,400. Considering these factors, I recommend a short position strategy. The entry price will be $86,400, coinciding with the recent low and oversold RSI reading. The stop loss should be set at $87,900, just above the forecast high for the week, to protect against a sudden reversal. The initial target price is $83,800, aligning with the forecast low and the lower Bollinger Band. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential buying opportunity, but given the overall downtrend, we'll maintain the short position. The portfolio will prioritize the short strategy with a modified target. If the price reaches $83,800, we'll take partial profits and move the stop loss to break even at $86,400. We will continue to hold the short position, targeting $82,400 as the final target. This approach balances risk mitigation with capitalizing on the predicted downward momentum, aiming for high returns while protecting against significant losses. Based on the historical data and forecast, Ethereum has shown volatility with a recent downward trend. The RSI values fluctuating around 47, indicating neither overbought nor oversold conditions currently. However, the forecast suggests a potential further decline to $2,870. Considering the support price of $2,790, we will implement a strategy focusing on short-term price movements. We will initiate a long position at $2,960, placing a stop-loss order at $2,870 to protect against further downside risk. The target price will be set at $3,120, aiming to capitalize on potential short-term bounces. To refine the strategy, we will incorporate Bollinger Bands analysis. The current price is near the middle band, suggesting a period of consolidation. If the price breaks below the lower Bollinger Band of $2,820, it would signal increased selling pressure, reinforcing our stop loss at $2,870. Conversely, if the price approaches the upper Bollinger Band of $3,320, it could indicate a potential for a short-term rally, allowing us to adjust the target price to $3,230. This combined RSI and Bollinger Bands approach aims to balance risk and reward, capitalizing on short-term opportunities while mitigating potential losses. Based on the historical data and forecast, BNB shows a downtrend. The RSI consistently hovers below 50, indicating a lack of strong bullish momentum and suggesting potential oversold conditions. The forecast for the next week predicts a continued decline, with prices falling from $862 to $824. The Bollinger Bands also support this bearish outlook, as the price has been trending near the lower band for a significant portion of the historical period. Therefore, a short position strategy is recommended. My recommended strategy is to initiate a short position at $862. The stop loss should be set at $840 to protect against unexpected upward movements. The initial target price is $824, aligning with the forecast. If the price reaches $824, we can reassess the situation. Considering the continued bearish trend, a secondary target price can be set at $800. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, XRP shows a declining trend. The price has been consistently falling from December 2, 2025, to December 15, 2025, and the forecast for December 16, 2025, to December 22, 2025, predicts continued downward movement. The RSI consistently falls below 50, indicating a bearish momentum, and the forecast price is below the support price of $0.503. Considering the downward trend and the RSI readings, a short position strategy is recommended. I suggest entering a short position at $1.9 with a stop loss at $2.26 and a target price of $1.76. To refine this strategy, let 3 incorporate the Bollinger Bands. The price has been trading within the Bollinger Bands, and the forecast price is approaching the lower band. The strategy will be a combination of the RSI and Bollinger Bands. I recommend entering a short position at $1.9 with a stop loss at $2.26 and a target price of $1.8. This strategy leverages the bearish trend indicated by the RSI, the support from the lower Bollinger Band, and the forecast price movement to maximize potential returns while minimizing risk. Based on the historical data and forecast, Solana is exhibiting a downtrend. The price has consistently approached the support level of $118 and has been unable to break through the resistance level of $132. The RSI consistently hovers below 50, indicating a weakening momentum, and has recently dipped below 40, signaling oversold conditions. The forecast predicts a continued decline, potentially reaching $119. Combining the RSI and Bollinger Band strategy, I suggest a short position. Entry price will be $127, with a stop loss placed just above the upper Bollinger Band at $144. The target price will be the forecast price of $119. To maximize returns, I recommend a portfolio that prioritizes the RSI strategy, with a smaller allocation to the Bollinger Band strategy. The RSI strategy dictates a short position at $127, with a stop loss at $144 and a target price of $119. This strategy capitalizes on the oversold condition and the anticipated downward trend. This portfolio offers a high-risk, high-reward profile suitable for experienced investors seeking significant gains in a declining market. The potential profit is substantial, given the anticipated price drop, while the stop loss protects against unexpected upward movements. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within a defined range. The RSI values fluctuate between 33.4 and 52.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest periods of volatility, with prices occasionally touching the upper and lower bands. Considering the RSI and Bollinger Bands, I propose a combined strategy. First, we will implement a trend-following strategy based on the Bollinger Bands. When the price touches the lower band, $0.272, it signals a potential buying opportunity. Second, we will incorporate an RSI-based strategy. When the RSI falls below 33.4, it indicates an oversold condition, which also suggests a buying opportunity. Therefore, the entry price will be $0.272 when the price touches the lower Bollinger Band and the RSI is below 33.4. The stop-loss price will be set at $0.268, just below the lower Bollinger Band, to mitigate potential losses. The initial target price will be $0.285, aligning with the forecast price and the upper Bollinger Band. If the price reaches $0.285, we will reevaluate the market conditions and adjust the target price accordingly. This combined strategy aims to capitalize on both trend-following and mean reversion opportunities, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Dogecoin is showing a clear downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week predicts further decreases. The support price has remained steady at $0.106, while the resistance has been breached, indicating a bearish sentiment. The RSI consistently remains below 50, fluctuating between 35.5 and 46.9, suggesting the asset is generally in an oversold or neutral condition. The Bollinger Bands are narrowing, which often precedes a significant price movement, and the price is currently near the lower band, reinforcing the potential for further downside. Considering the prevailing downtrend and technical indicators, I recommend a short selling strategy. Enter a short position at $0.134. Set a stop loss at $0.137 to limit potential losses if the price unexpectedly reverses. A reasonable target price would be $0.119, aligning with the forecast and the lower Bollinger Band. This strategy combines the bearish trend, oversold RSI readings, and the price's proximity to the lower Bollinger Band to maximize potential returns while mitigating risk. The portfolio will be 60% short selling Doge-Coin, 20% holding cash, and 20% investing in a stable coin. Based on the historical data and forecast, Cardano demonstrates a clear downtrend. The price has been consistently declining from $0.471 to $0.389 over the past 2 weeks, and the forecast predicts further decline to $0.362. The RSI consistently remains below 80, indicating no overbought conditions, but dips below 37.1, signaling potential oversold opportunities. The Bollinger Bands are contracting, suggesting decreasing volatility. Considering these factors, I recommend a short selling strategy. The entry price should be $0.389, capitalizing on the recent downtrend. Place a stop-loss order at $0.414, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The target price should be $0.362, aligning with the forecast. The strategy will be to short sell at $0.389, with a stop-loss at $0.414 and a target price of $0.362. This portfolio is designed to capture the anticipated downward movement of Cardano with a conservative risk management approach. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with increasing volatility. The RSI consistently dips below 60, indicating weakening momentum. The forecast for the next week projects a continuous decline, with prices falling from $559 to $524. Considering the support price of $480 and the current price of $537, a short position is warranted. We will enter a short position at $537, placing a stop-loss order at $547 to protect against a potential reversal. The target price is set at $514, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential shorting opportunity. As the price is currently near the upper band, we will initiate the short position at $537. The stop-loss will be adjusted to $543, just above the lower band, to account for potential volatility. The target price remains at $514, aligning with the forecast and support level. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH shows a declining trend. The price has been fluctuating within a range, but the forecast suggests a continued downward movement. The RSI values indicate that the asset is not significantly oversold or overbought, hovering around the mid-range. The Bollinger Bands show a contraction, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a short selling strategy with a focus on the forecast period. Entry price will be $3,320, with a stop-loss set at $3,340 to protect against a sudden reversal. The target price is $3,120, aiming to capitalize on the predicted downward trend. To refine this strategy, we will incorporate a layered approach. Initially, a smaller position will be established at $3,320 with a stop-loss at $3,340 and a target of $3,270. If the price continues to decline and reaches $3,270, a second, larger position will be opened at $3,210 with a stop-loss at $3,230 and a target of $3,190. This layered approach allows us to mitigate risk and maximize potential returns by adjusting our position based on the asset's performance. The overall strategy is designed to capitalize on the predicted downward trend while incorporating risk management techniques to protect capital. Based on the historical data and forecast, Ether.fi exhibits a downtrend, especially considering the decreasing forecast prices from 0.807 to 0.753. The RSI consistently hovers around the mid-40s to mid-50s, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest periods of volatility. We will implement a combined strategy utilizing RSI and Bollinger Bands to capitalize on potential short-term fluctuations while mitigating downside risk. Our primary strategy will be a short position. Entry price will be $0.787. The stop loss will be set at $0.81, just above the upper Bollinger Band to account for potential short-term rebounds. The initial target price will be $0.753, aligning with the forecast low. If the price reaches this target, we will reevaluate the trend and adjust the strategy accordingly. This strategy combines technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dash shows a clear downtrend. The price has been consistently declining from December 2, 2025, to December 15, 2025, and the forecast for December 16, 2025, to December 22, 2025, predicts further downward movement. The RSI consistently remains below 50, indicating a bearish sentiment. Considering the support price of $37.5 and the downward trend, I recommend a short position. Entry price will be $40.8, with a stop loss placed just above the recent high of $41, at $41.5. The target price will be the support level of $37.5, aiming for a profit of $3.3 per Dash. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it could signal a potential bounce, but given the overall trend, it's more likely a continuation of the decline. Therefore, we'll maintain the short position. If the price approaches the lower Bollinger Band of $36.3 on December 15, 2025, and the RSI is approaching the oversold level of 20, we can tighten the stop loss to $38 to protect profits. The final target price remains at $37.5, offering a reasonable risk-reward ratio. This combined strategy leverages the trend, support levels, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PAX Gold shows a generally upward trend. The RSI consistently stays above 60, indicating bullish momentum, and the price has been bouncing off the 4240 support level. The forecast predicts continued upward movement, reaching $4,370. Considering these factors, I recommend a long position strategy. The entry price will be $4,300, coinciding with the start of the forecast period and recent price action. The stop loss will be set at $4,240, just below the established support level, to limit potential losses. The initial target price is $4,360, aligning with the midpoint of the forecast range. To refine this strategy, we can incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential buying opportunity, as it indicates the asset is relatively undervalued. Conversely, touching the upper band suggests a potential selling opportunity. Given the current upward trend, I suggest holding the position until the price reaches $4,360. If the price breaks through the $4,360 target, consider setting a revised target price of $4,370, reflecting the forecast. This combined RSI and Bollinger Band strategy provides a balance of momentum and volatility analysis, aiming for high returns while managing risk. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within a defined range. The RSI values fluctuate between 33.4 and 52.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest periods of volatility, with prices occasionally touching the upper and lower bands. Considering the RSI and Bollinger Bands, I propose a combined strategy. First, we will implement a trend-following strategy based on the Bollinger Bands. When the price touches the lower band, $0.272, it signals a potential buying opportunity. Second, we will incorporate an RSI-based strategy. When the RSI falls below 33.4, it indicates an oversold condition, which also suggests a buying opportunity. Therefore, the entry price will be $0.272 when the price touches the lower Bollinger Band and the RSI is below 33.4. The stop-loss price will be set at $0.268, just below the lower Bollinger Band, to mitigate potential losses. The initial target price will be $0.285, aligning with the forecast price and the upper Bollinger Band. If the price reaches $0.285, we will reevaluate the market conditions and adjust the target price accordingly. This combined strategy aims to capitalize on both trend following and mean reversion opportunities, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Trust Wallet shows a declining trend. The price has been fluctuating within a narrow range, with support at $0.964 and resistance at $0.994. The RSI consistently hovers around 40, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast for the next week predicts a continued downward trend, with prices potentially reaching as low as $0.94. Therefore, I recommend a short position strategy. Specifically, I suggest entering a short position at $0.978. Given the downward trend and the proximity to the resistance level, a stop loss should be placed slightly above the resistance at $0.994. For the target price, I anticipate a decline to $0.96, aligning with the forecast and support level. This strategy combines technical indicators and price predictions to maximize potential returns while mitigating risk. The RSI is not in the oversold zone, so we should not enter a long position. The Bollinger Bands are narrowing, which indicates that the price will continue to decline. Based on the historical data and forecast, Sun token demonstrates a slightly downward trend with fluctuating volatility. The RSI consistently hovers near the oversold territory, suggesting potential for a short-term bounce. The Bollinger Bands show that the price is currently near the lower band, indicating a possible rebound. Therefore, I recommend a moderately bullish strategy. We will initiate a long position at $0.0201. A stop-loss order will be placed at $0.0198 to mitigate potential losses if the downward trend continues. The initial target price will be $0.0209, aligning with the recent resistance level. To optimize the strategy, we will implement a tiered target approach. If the price reaches $0.0209, we will secure a portion of the position and move the stop-loss to the entry price of $0.0201. This locks in profits and protects against a reversal. Further, if the price continues to climb, we will set a second target at $0.0217, coinciding with the upper Bollinger Band. This allows for capturing additional gains if the bullish momentum persists. The RSI readings, combined with the Bollinger Bands, suggest a reasonable probability of a short-term upward movement, making this a calculated and potentially high-return investment. Based on the historical data and forecast, just shows a slight upward trend, fluctuating within a defined range. The support price consistently remains at $0.0381, while the resistance price is $0.0435. The RSI values hover around the middle range, indicating neither strong overbought nor oversold conditions. However, the forecast predicts a gradual increase, with prices expected to reach $0.0401 by December 22, 2025. The Bollinger Bands also suggest a narrowing trend, indicating potential volatility. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the predicted upward movement. Specifically, I suggest entering a long position at $0.0388 on December 16, 2025. The stop loss should be placed slightly below the support level at $0.0378 to mitigate potential losses. The initial target price should be set at $0.0397, aligning with the forecast high for December 22, 2025. If the price breaks through the initial target, we can consider raising the target to $0.0401. This strategy combines the upward trend, RSI readings, and Bollinger Band signals to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Zcash shows a volatile trend with significant price swings. The RSI consistently stayed below 80, indicating an absence of overbought conditions, and frequently dipped below 30, suggesting oversold conditions. The Bollinger Bands also reflect this volatility, with the price often touching or crossing the upper and lower bands. Considering the recent price action and the forecast for the next week, I recommend a combined strategy utilizing RSI and Bollinger Bands to capitalize on potential price movements. My strategy involves a long position entry at $387, coinciding with the first forecast price and a potential bounce from the lower Bollinger Band. A stop-loss order will be placed at $365, slightly below the lowest forecast price to mitigate potential losses if the price continues to decline. The target price for this trade is set at $412, based on the recent historical high and a reasonable profit expectation. This strategy aims to benefit from a potential upward trend following a possible oversold condition. A secondary strategy involves shorting at $455 if the price breaks above the resistance, with a stop-loss at $460 and a target of $434. Combining these two strategies creates a portfolio that can adapt to different market conditions and maximize potential returns. Based on the historical data and forecast, Morpho exhibits a clear downtrend. The price has been consistently declining from $1.47 to a forecast of $1.01 over the past 2 weeks. The RSI consistently remains below 30, indicating an oversold condition, but failing to recover. The Bollinger Bands show that the price is nearing the lower band, further confirming the bearish sentiment. Therefore, my strategy is to implement a short position. I recommend entering a short position at $1.12, coinciding with the support level. A stop-loss should be placed at $1.14 to protect against a potential false breakout. The initial target price is set at $1.03, aligning with the lower Bollinger Band and the forecast price. To maximize potential returns and manage risk, I suggest a tiered target approach. After reaching the initial target of $1.03, we can move the stop-loss to the entry price of $1.12, effectively creating a risk-free position. Subsequently, we can set a second target price at $1.01 based on the forecast. This strategy combines RSI, Bollinger Bands, and support/resistance levels to capitalize on the established downtrend while incorporating risk management techniques. This will provide a high return with a calculated risk. Based on the historical data and forecast, Aave shows a fluctuating trend with recent consolidation around $190 to $203. The RSI consistently hovers around the 50 mark, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering the support at $188 and the forecast prices, a cautious but potentially profitable strategy is to implement a long position when the price touches the support level of $188. Place a stop-loss order at $185 to mitigate potential losses if the price breaks below the support. A reasonable target price would be $197, aiming for a moderate gain. To optimize the portfolio, we will combine the RSI and Bollinger Band strategies with the support level strategy. Initiate a long position at $188. Set a stop-loss at $185. If the RSI falls below 30, consider exiting the position early. If the price reaches the upper Bollinger Band, consider taking partial profits at $194. If the price continues to rise and breaks above the $197 target, move the stop-loss to the entry price of $188 to secure profits. This blended approach balances risk and reward, leveraging multiple indicators for a more informed decision-making process.